Wanted to come in here kind of quickly and map out some key levels and show you how I'm breaking down my overall US30 chart and what I mean by these key levels or key areas in the market, right? So clear chart, and we're on the 4-hour chart on US30 right now, mapping out key levels of support and key levels of resistance in the overall chart itself. And once I map out these, I'll kind of explain a little further in depth what I mean by previous market structure, the confluence within that, and the overall trend of the market. So again, mapping out super key levels on the 4-hour chart of high time frame support and resistance. And then this gives you kind of the blueprint to look into previous market structure, either the break and retest, potential impulse sells or buys, and then gives you a really clear vision of where price should head due to previous data. And then once I map out all those zones, I begin looking into my actual zones for current data. So now that we have those levels mapped out, again, there's really not much data ahead of this, so I'm not going to put any. I begin to draw out and map out my key zones in these structures. Right, and I usually typically will draw these zones right around 20 to 30 pips, depending on where I'm at in the market. So again, coming in, clear chart, showing you how I map out my overall chart, how I begin to look for potential trades within the market, my overall analysis in the market, and begin executing off that, right? Tying everything in one, right? The break and retest, integrating the fibs within all this, and overall finding confidence and analyzing in the market as a whole. Again, you don't have to copy any of this. You don't have to listen to really any of this if you're not looking for that. But I think some people in here could kind of find a little bit more confidence within their trading and a little bit more confidence in the charts on their own time as well. So again, all this analysis is off the 4-hour chart, looking at high time frame key levels of support and resistance, and then going back in data and looking at how prices previously reacted at the break of these said zones, right? And what you'll begin to see is the clear flow and structure of the market will usually follow suit, right? One clear example is the breaking back below this zone right here typically results this zone into being tapped into. The same thing down below this, the breaking of this zone has a clear path to the bottom of this zone. You see that right here, right? We break below this zone, eventually we tap into this zone. Same thing on the top side, right? Previously we break above this zone and we see this next zone being tapped into. So when I talk into previous market structure, that's my main focus, and that's a little bit more confluence within the overall idea of my trade, right? And then what you'll notice is I begin to use these certain levels as areas of potential targets within the market, right? If we see these high time frame supports and resistance being broken, the next zone and target we should be looking at for is that next overall zone, right? Maybe a little bit off, maybe a little bit shorter, but overall, that's the pretty much principle behind mapping out these levels. It gives you a good, strong idea of where you are in the market, as well as giving you the clear confidence not to execute in the middle of these zones, right? When you dive in on the 15-minute, I'll show you the reason why I draw these zones is because it gives you a clear view of when price really breaks out and or holds support, right? You'll see a little bit of slippage in In the off sessions, as in Asian and London sessions, you'll see slippage that doesn't fully play out. But when you're back testing and looking at previous data, it's important to really look at the time frame of when that either slip was or the break of structure was, to let you know was there enough volume in the market to either drive price to that top next zone or to the bottom side, right? So when you go into the higher time frames and you're looking for that previous data, just take a note of what time of day it was and what session it was actually trading at the break of that zone. So again, showed you how I'm drawing my fibs, showed you when I'm drawing my fibs and where I'm drawing my fibs. Now I'm showing you how I'm mapping out my chart overall from a clear chart, mapping out these higher time frame levels of support and resistance, showing you how I'm mapping out my zones. And I think zones are really important because it gives you that clear view of when price really breaks out of these said structures. And then I'm also explaining as to why I'm anticipating price to go to a certain point at the break of these key zones, right? So again, all this is off the 4-hour chart, and then you'll begin diving in on the lower time frames, and then that's when you kind of integrate the Fibonacci to maybe look for a potential pullback, or if you don't get that with a ton of volume, look for that overall lower time frame retest for the continuation of that broken structure. Or vice versa, the support of that structure, if it holds, looking for that next zone to kind of give you that ping pong view, right? And again, you see that whole structures all across the board hold true, and then tying in that previous market structure to give you that little bit more confluenced and also give you that little overall target idea, right? Doing this, again, nobody has to map out their zones or map out their levels like this, but giving you a clear view and a clear idea of how I'm doing it, and maybe you can integrate one or two things I say in here to potentially add into your own analysis or give you a little bit more confidence in what you're overall doing, maybe on your own or when you are trading with me live. Again, all my analysis comes off the 4-hour, and then I begin diving in on the 1 hour to get a little more candle data, and then start mapping out my overall ideas for that next session, right? And again, what I would say here again is the same thing comes into play, right? If we see this break of structure, I highly anticipate with the volume of New York session to tap into this next overall zone, right? But what you're seeing here is you see this structure semi being broken, but again, this is in the London session, so we didn't see that overall breakout occur because of the time of day. So again, when you do look at some of these slippages or some of these zones not fully being played out, you have to look into what time of day it was, which session it was, and maybe look at the potential news as to what caused either that slippage or maybe the lack of volume in that direction of that zone. Again, this isn't flawless across the board, but this is how I map out my charts. This is examples of what I'm targeting at the break of these zones and what I'm overall looking for, right? Gave you the formula I use with my Fibonacci's, and tying all this into one is a very clean system to trade upon. It's a very consistent winning system. Again, I encourage everyone to kind of listen to what I'm saying here, integrate the fib, and go to replay mode. Go back 4 months, go on the 4-hour chart, map out super key levels, and then watch how the market moves and watch how the market moves at the break of these specific levels and see how often it plays out, right? Get a little notebook next to you and write W's and L's, and then just tally each one and look how consistent you can really become. Low risk, a little bit higher reward, and really overall just targeting that next zone in the overall process to the top side or to the bottom side. Again, this isn't flawless. Like today, we took some losses, but overall, long term, this is a very consistent and clear way to look at the market, give you a good understanding of where you're trading at, so you're not trading in the middle of these zones and getting caught in either a consolidation or a potential fake out in the middle of the zones. Again, it gives you a clear view and a clear idea of where price is and where price could potentially head at either the break or support of these key zones. So again, all this is done on the 4-hour, high time frame key levels of support and resistance, looking at the confluence across previous data into current data, and then looking at the overall previous market structure of these said zones. Just wanted to pop in, give you this kind of clear view of what I'm really kind of diving in and looking for, and see if it's something you want to maybe integrate within your own style to maybe add that one more layer of confluence within your own analysis and your overall own trades. So again, popped in real quick, broke down these key levels that I call and you hear me mention out all the time, these key levels being broken or held. Here it is, and overall that's pretty much the gist of it, right? And then you have this setup, and then that's when you can begin adding on within your Fibonacci's at either the break or retest of these zones, and then overall bringing it all into one, right? The price action, the fibs, the break in and retest, and tying it all into one winning structure, right? You do take losses, it's inevitable, but overall this is a very consistent and clear way to figure out where you are on the map, one, and two, where you are on the map on these higher time frame trends, right? Hopefully this answers a couple questions. Hopefully this clears up a little bit of maybe confusion, or gives you that little bit more boost in confidence